All right. Welcome to this episode of Blockchain Speaks. That slows you down a little bit, but here's what they don't do. They don't know how to really enforce that to the down to the T. So what the Biden administration came up with was, let's go after the banks and the financial institutions, right? And that's why you started to see the financial institutions start to apply for license for the Bitcoin ETFs or the Ethereum ETFs. That's why you hear the micro strategies with Michael Saylor and the Mike Novacek with the a Galaxy Global. Then you got the Saramucci. All these guys are really bullish on crypto, and mostly Bitcoin, Ethereum, and those alike, because they're trying to make sure, and the Winklevoss brothers, they are the ones running Gemini, and Grayscale, and all these guys are really stepping into the ring so they can actually have their stuff documented. Like, look, we are regulating this in the way that we know how to do it. And so, hey, don't come after us. We're doing the right thing. So when the banks get involved, because people are pulling their money out the bank in order to purchase crypto, there are banks, like I said, I know in the UK and in the US as well, but in the UK, big time, people are trying to use Barclays, or they're using these banks, and they're stopping them from actually purchasing crypto. And then you have some credit cards that are stopping people from purchasing crypto. Bank of America got involved a little bit. You may have Discovered, they're just like not really helping the people when they want to purchase cryptocurrency. And so a lot of them are putting themselves in a position so they don't get hit by the government, because the government, has issued policies and saying, hey, if somebody is, transacting more than $600 and they want to purchase, Bitcoin, you have to report it. Right. So instead of going through all the exchanges and the Coinbase and the Geminis and the Coin Zooms and Krakens and Binance and all these other ones, it's just too many to deal with. They go where the regulation is already in place, to the banks. You're going to put your money in the bank. You're going to take your money out the bank. You're not going to go around the bank. You got to use that to purchase, crypto. And when you do receive crypto, guess where you're going to put it? In your bank, right? So all of that is how the government is tracking your money. Now, eventually they're going to come up with a way to tax you on it, but that's just hasn't been worked out yet. So we're going to go through this real quick, because I am definitely looking at this as this is going on way too long. But I think this is good information, and I want you to really understand. So when we talk about the executive order from the U.S. perspective, then the Reed Smith agency, they literally broke this down. And that's why I wanted to go through on their site instead of going straight to the document, which I do have, but I want to just use, because they paraphrase, they broke it down easier for us to digest, right? So I'm going to talk a little bit about this, and then I'll skip through a lot of it. But just so you know, when we talk about VPN, we're talking about cryptocurrency, we're talking about blockchain technology, we're talking about how do we protect ourselves from some of these issues. Regulations is another way that the government is protecting and want to protect citizens, from being, put in a bad position. And I get it. I understand. So I want to talk a little bit about the government side that's trying to propose some regulations. So here, the commentary is, just so you get a gist of it, describes the approaches of key global regulators in their quest to develop responsible frameworks or regulatory, frameworks that properly balance the benefits of cryptocurrency with regulations and standards, and for the consumer's protection, fair market conduct, and financial inclusion, stability, efficient retail and interbank transfers and payments, data privacy and security, appropriate taxation, and more. So taxation, data privacy, they're trying to protect the consumer, all these kind of things. But at the end of the day, they're really trying to protect fair market conduct and financial stability through these interbank transfers, because that's where most of the money is going around. As the cross-border paradigm of cryptocurrency evolves, an abiding tenet across jurisdictions is close coordination among global financial regulators. The purpose of increasingly close coordination is to foster adoption of tailored oversight frameworks that monitor the shape cryptocurrency regulation, taking into account the particular characteristics and use cases of cryptocurrencies. Basically, financial regulators appear to see value in working together toward aligning the policy foundation of regulatory standards for a digital finance services world. So they're not saying that they don't like digital currency. They are just saying we got to figure out a way to work together globally in order to align with some type of policy to help people not get ripped off. That's kind of what they're saying. So the US came up with their way of looking at this. Okay. So the US executive order on digital assets adopts the level playing field principle. Same business, same risk, same rules, and an incremental approach to applying regulatory and supervisory standards that govern traditional market infrastructure and financial firms. To carry out US policy, the US executive order establishes 6 priorities for government oversight of cryptocurrencies. Now, and so, yeah, you can kind of go over that. So anyway, very interesting information. One of the things I found interesting, they talked about the cross-border, the central bank digital currency, CBDC, right? That's a big deal, right? Because central banks have the authority to create money out of nothing. And so that's what they're trying to do, because digital currency like Bitcoin is a big deal. And the blockchain, was really materialized from that distributed ledger technology. So when we start to understand all of that, the central bank said, okay, we can do the same thing and have a little bit more control where people aren't being taken advantage of. Now, if you've been around for the last couple of years or so, you know that online there has been a lot of bad actors that have taken advantage of a lot of folks in a lot of countries through digital currency and schemes like that. And so that's why I'm not against regulation. I just want it done in the best way. And nobody really knows how to do that. And so a couple of areas in the world, the US, one, obviously in the UK is doing a little bit, but the EU has come up with something as well. They're trying to figure out the best way to do that. And the initial conversation was central bank digital currencies and basically their own version of a stable coin in that country or that group of countries. And I'm gonna tell you, it seemed like every country came up with an idea of a central bank digital currency, believe me, and most of them are still struggling to figure it out because Bitcoin, Ethereum, BNB, Litecoin, the Doges and the Shiba Inus out there. I mean, they're just, and the XRP is another one, just captivated people and they just won't let those go. So it's hard to get them to come over to a central bank digital currency. We know that El Salvador has allowed, Bitcoin to be legal tender. We know that Venezuela has, Litecoin, Dashcoin is one of the big currencies there. And then in Nigeria, they legalized their own central bank digital currency or digital currency that they basically were trying to get people to go ahead and use. China did the same thing, a digital one. So a lot of countries are doing this. Bahamas had what they call the digital dollar or sand dollar. So there are, different countries that have experimented with this and some have some success with it. And the US is struggling to figure this out. All right. And so just an example here, it says, although the US executive order established the whole of government strategy with respect to digital assets, the U.S. government agencies have been actively addressing many of the issues and priorities articulated in the executive order for years. For example, the Treasury Financial Crimes Enforcement Network, FinCEN, determined in 2013 that exchangers and administrators of convertible virtual currencies are money services businesses subject to the Bank Secrecy Act and must register with FinCEN. Further, the Securities Exchange Commission, SEC, and the Commodity Futures Trading Commission have taken a number of digital asset-based enforcement actions against individuals and entities since 2018. So they're already, out there making sure that if you're going to say you're doing some type of money services, right? MSB, money service business, then you need to get registered with the FinCEN, FINRA, SEC, all of them, so that you can be protected, right? No fraud, none of that nonsense, right? Or their agency called Chain Analysis will track you down and get you messed up with FinCEN. So you don't want to mess with those guys, right? So they've been doing this. They've been tracking this since 2013. So if that's the case, they're getting pretty good at this. There's people that have stolen, Bitcoin, and people say, hey, it's stolen. We can't track it down. They go through a whole thing. Well, guess what? The FBI was able to track it down and get it back. So you know how serious those guys are if they can do that on the blockchain. So think about that. Yeah. So we won't get into that, but very serious about what they're doing. All right. So the federal banking agencies issued an interagency roadmap of crypto engagement in November 2021 that focuses on how banks could store crypto assets, safely settle and execute crypto trades. They can lend, taking crypto as collateral, activities involving facilitation of customer purchases and sales of crypto, and payments, including stable coins and so on and so forth. So they just have to report all of this on their balance sheet. And that's what's critical about understanding what's happening when you're transacting crypto and you're taking your money from your bank. They are tracking all of that, right? And so it really leads us all the way back to the issue of VPNs, data privacy, financial privacy, internet privacy, right? All of that. When you sign off on the policies with your bank, then they basically say we have the right to use your information, and that's what they're doing. All right. So here it says the SEC issued a proposed regulation amendment in January 2022 to expand coverage of regulations, ATS and SCI, to U.S. Treasury and securities alternative trading systems that raises the possibility of subjecting crypto trading and other platforms to regulation as a communication protocol system. So they're trying their best to get closer to some agreement. The Federal Reserve Board issued Money and Payments, the U.S. Dollar in a Digital Age, transformation describing consideration related to potential issuance of a U.S. central bank digital currency, and an international finance discussion paper called Stablecoins, Growth Potential and Impact on Banking. So, like I said, there's a lot of traction. There's a lot of movement. There's things that they're really trying to do to ring in, some type of regulations to help people that want to involve themselves in transacting digital currency. Like I said, I'm not against it. It's not all bad, but there are some challenges that they need to overcome. The Federal Bureau, like I said, the FBI announced the formation of the Virtual Asset Exploitation Unit in February 2022, a specialized team dedicated exclusively to cryptocurrency, blockchain analysis, and virtual asset seizure. Yeah. I'm telling you, these guys are serious about if they're not getting their tax money, then they're going to find ways that they can take the cryptocurrency that you're maybe huddling, in a wallet somewhere. Therefore, your non-custodial wallets are really, really your best route to go. Cold wallet would be the best. All right, so we're not going to get back. We're going to move on, right? So as you can see here, the European Commission and European Parliament, or the European Union, right? They have a crypto policy. In March, they talked about developing a policy, and they called it the Markets in Crypto Asset Regulation, or MiCA. This is intended to ensure unambiguous handling of cryptocurrencies and regulate crypto asset services and crypto assets which are not already subject to existing European regulation. Now, here's what's interesting. Yes, I did read about this one too, because I really wanted to understand what they were doing compared to what the U.S. The U.S. is all about, hey, FBI, go over there and make sure that people are doing what they're supposed to do. If they're not, then, hey, seize their assets. It's all good. It's all about, the legal execution and how can I penalize you. But when I read about MiCA, this Market in Crypto Asset Regulation, so one of the things that I understood about that particular regulation, and I want to go ahead and pull that up so you can, kind of see what they're talking about. In that one, it talks about even if you are, you don't have to be regulated. You just have to be associated with a regulated financial institution, right? So what's interesting about that is because you have, let's say you have, small players in the game and people that want to create an exchange, for instance. Forex is pretty simple, straightforward. You go through a broker, they're licensed. You put money into that broker account and they trade for you, right? So you don't have to be licensed. And that agency, you're just making sure that, hey, wherever I put my money, if you're doing the trading, then you have to be licensed. But everybody doesn't have to be licensed. One is a licensed trader that has a Series 7, maybe certification to say that I am authorized to do this. Another one may be licensed to take money, right? They don't have to be licensed to be traders or investors. They just have to be licensed to handle money. That's two different things, right? And a lot of people want everybody to be traders, but they're not. And so the SEC is not involved. The FTC is not involved. What is it? FCA is not involved. None of that, because they're not traders. But when it comes to just money handling, then that's MSB, money service business, right? That's a different license. So you have to understand that there's not going to be license on all levels. And you may be able to deal with somebody that is a broker for the trader. Okay, so those are some different ways that happens. All right, so let's get into this particular one here. All right, so this one is about MiCA, markets and crypto assets regulation. All right, so this is good because they really put all this in a nice little package for us, and we're going to go through this, like I said, pretty quick because I'm not going to spend too much longer on it. The European Commission introduced in September 2020 a proposal for regulation on markets and crypto assets, right? And this is just part of a bigger, broader digital finance strategy. So what are the 4 essential objectives here? What they're trying to do is ensure legal certainty for crypto assets, right? Supporting innovation and fair competition, right? Because there are big agencies. You can take a bank, they're already in this space, then they're going to have an easier time incorporating crypto. Then you take, one of these, startups, they may not have the finance, they may not have the connections, because these bigger networks and these central banks, they're like, no, you're not getting into this game. Well, it's going to be a little harder for those small, mom and pop joints to do it. So they're trying to make sure there's supporting innovation and fair competition. And like I said, part of what they're doing is allowing, you may not be the big dog, you may not have the license, but you can partner with one of the banks or a bigger agency with the license. And that's where you see the Bank of Americas, and you have, agencies that are partnering with the Bank of America, agencies that are partnering with the Goldman Sachs, they're partnering with the Barclays, right? They're not doing it themselves. They're just grabbing one of those, crypto experts and letting them run that division or that portion of it. So that's how the team is working, and they meet the requirement when they do that. Protecting consumers, investors, and market integrity. Very cool. Ensuring financial stability with the inclusion of safeguards. And so they're trying to protect you. That's their whole, sales pitch, I guess. So the majority of crypto assets which are not already governed by other regulations will fall under the scope of MiCA, such as e-money tokens, utility tokens, and assets reference tokens. So, okay. So issuers of crypto assets falling under the scope of MiCA will be subject to several obligations. So they have to produce a white paper, the necessity to be authorized to issue crypto assets, and compliance with certain prudential rules. Okay, makes sense. Entities providing crypto asset services will qualify as crypto asset service providers. Okay, very cool. Crypto asset services may notably include the custody and administration of crypto assets on behalf of third parties, right? So that's where that issue is, right? On behalf of, right? So you don't have to be the one, you just have to, if you have a license, then you can actually partner with a third party, and you will be the one that has custody and administration of the crypto assets on behalf of. So you may be the crypto division, right? Your company comes in and contracts with a Barclays or a Bank of America or something like that. They are the ones with the financial license, and you're the custody and administration for the crypto asset division of that bigger company. So MiCA is likely to create a harmonized legal framework with strong safeguards for historically non-regulated crypto assets, right? So they're just really trying to, quote unquote, like I said, help. But this regulation should not be considered as a standalone initiative, because they really need help from others. The European Commission's digital finance strategy relies on MiCA, but also on the DLT, Distributed Ledger Technology Pilot Regime, and the Digital Operation Resilience Act. Read our dedicated regulation memo for an in-depth view of MiCA and the industry implications. All right. So hopefully that gives you some idea of what I'm trying to deliver to you in the context of why are we afraid of the term VPN? We shouldn't be. If you're investing in crypto, you should want to protect your data. A VPN is used to protect your data. I have a video that I created for people that have subscribed to and become members of my community with a crypto investment called Safir Global and Zeniq Technologies. Zeniq Technologies is an actual company that is registered in Dubai, and that company is registered as a research and development company. They do consultancy with the Dubai government on blockchain technology and how to move from offline to online, from offline or physical world, so to speak, online to the blockchain. And they have a tokenization process to do that. And the Dubai government saw that as an advantageous partner. And so they are supporting that move. And they have been doing it for over a year plus some change. But the company itself, Zeniq Technologies, they've been doing it since 2018. So they're not new to this. And they did have they had previous experience with some partners, and it didn't work out. And so a lot of times you will search the web and you'll see people talk about other companies called Juelas, and you'll see that they have the same type of product. Well, guess what? The person that had the idea, it was their idea. But the initial manufacturer, the initial players, it didn't work out. They didn't produce, they didn't hold up their end of the bargain. Right. And so when people do research, because I've done it and I looked at the information and I'm putting it out there because I want you guys to know that when I talk about this, this is transparency. I'm telling you that the company, the CEO did try to work with others before, and Juelas was the company, and it had some faults. It had problems. But you know what happens? Because when you are trying to start a business, you have an idea, you have a concept, you have something that you really are trying to build, and you need help to put all those parts together. And you bring in people to do that. This is blockchain technology. This is serious business. You got to have the right people to understand that technology. But then you got to market that technology. You got to have a MVP, right? A multiple viable product that you can pitch so that you can get people to buy in. Then you got to do some crowdfunding in order to get that thing off the ground. And that's what they were trying to do. But 2018, 2019, guess what happened? 2020 hit and they could not move. Why? Because they were in Austria. They were building this whole movement in Austria, getting the idea out there, getting the concept going, trying to create the MVP, trying to get movement, and COVID hit. And COVID was not planned, right? So it went through the community. They couldn't get the manufacturer. Why? Because they were ordering some of the parts from China. They had a manufacturer that couldn't produce because they were in China. Now, what happened in 2020 with China? Of course, you couldn't do anything. So they have manufacturers that couldn't produce for them. But then when they had promises from some of the other partners that they could make it happen, they allowed them to go out there and do that. And guess what? They couldn't deliver either. And they had deadlines and they had investors. And guess what? They had to part ways with those same people. They didn't fail by no stretch of the imagination. They just tried so many different ways to make it work. The idea is perfect. The Zeniq Hub is the first of its kind, the only one like it. And there are over 250,000 sold to this day in 1 year. Why? Because it works. It was the agency and the partnerships they had didn't work from day one. They had problems in 2018, 2019. Absolutely. Some of that information is still on the internet today, and people are still using that. Bloggers are putting that out there as if it's something wrong with somebody trying. People talk about Disney and they tried like 39 times to get a loan so he could start his business. Guess what? On the 40th time, he got a loan, and now look at what Walt Disney created, right? And it wasn't even him; it was his brother. Look at how many times, the chicken, KFC, how many times they tried. I'm gonna tell you, I can talk about companies day in, day out. Think about it. I mean, Dave Kroc. he wasn't. Dave Kroc worked for Burger King, you know, owners before he created, and Roger Kroc is his name actually, before he created McDonald's. Come on. So did he fail? No, he learned the craft, right? And then he saw an opportunity to buy land, and he was a master at franchising, and it just happened to be a burger facility that he was using as the product to franchise. That's all he was doing, was franchising. He was buying land. His goal was to buy as much land as he could in key places around the nation and put McDonald's on that land. So he was selling land. He wasn't selling McDonald's burgers. He was selling land, but he had to learn somewhere. And that's what the Zeniq owners did. They partnered with people. It didn't work out. They had to learn from those mistakes, and they did, because guess what? It's a very successful business that is in phase 2 today. And so when I hear people talk about VPNs and, oh my gosh, if you're in the US and using the VPN to access your Safir Global or Zeniq Technologies business, that must be something wrong. No, it's something really right. You know, and I have a whole video that shows you how to access your account through a VPN, what we call the Tor browser, right? So real quick, I'm going to show you one last thing about this, and then we're going to move that on, because I don't want to continue down this road. I got a lot more information I want to talk to you about. So the VPN, and what was the other one? I want to talk about Web 3.0. That's what I want to talk about. All right, so let's go over here, and then I can, because like I said, I know this has been on for a while, but this might be part 2. I'm gonna have to split this one up. So this is probably going to be part 2, but you will definitely see the beauty of what I'm saying. And so all this information, I know it's a lot of information, so I definitely want to break this one up. So will Web 3.0 affect your VPN? So it's not about that. What I really want you to get from this is understanding that there is a Web 3.0. We're in Web 2.0. 3.0 is on its way. But what is Web 3.0, and how does it really have anything to do with the topic at hand, the VPN, or private internet access? Well, let me give you some idea. VPN. So it says, it's hard to believe that we're already on the cusp of Web 3.0. But with the advent of blockchain technology, it seems inevitable. So when we talk about that, we want to look at, how does Web 3.0 affect the VPN? But you really want to know what a VPN is. So I talked about VPN already, and so you kind of have an idea, right? So that might have been in part 1. So let's go back over that for a second, right? We're going to talk about what is a VPN and how does it relate to a Web 3.0. Okay. So you're probably saying, okay, what is a Web 3.0 in the first place? Well, that's, you know, I don't want to go too deep into that, because I can use that for another topic, and we'll talk about that on another one. But the main difference that you want to understand about Web 3.0 versus 2.0, 2.0 is more about centralized servers. Web 3.0 is about decentralized servers. Decentralized meaning how your data is stored and accessed. Right now, your data is stored, centralized in, you know, massive storage amounts. Like my computer, for instance, I had to switch storage areas while doing this video because one was full. My hard drive is full, and I continue to fight with that, but it happens. So I had to go to cloud storage. In the future, Web 3.0, the cloud and decentralized storage will be king, really, right? And so you have Filecoin, you have Bluezell. These are actual blockchain filing systems that you can use, and it's all decentralized, right? You have full control over them. So that's really the difference in 2.0 and 3.0, is that the decentralization of your data and how it's stored and how you access it, and it protects you more so. And that's where this VPN topic comes from, is data privacy. How do you protect yourself in this day and time with all of these new things coming along? So a VPN, just to recap, is a piece of software that allows you to connect to the internet via a secure or private tunnel, right, or channel. This encrypts your data and all your traffic hides your IP address, and makes it difficult for anyone to track what you're doing online. So nobody needs to know, and there's no reason for them to even be prying into your particular footprints or your search, history. Just like I said, it's nothing you're hiding. It's just the fact that it's no reason for them to follow behind you and write down everything you do and everything you say. It's kind of not cool. So how will Web 3.0 affect VPN? So how does it work together? So there are a few potential ways that Web 3.0 could affect VPNs. One is that the decentralized nature of the new web could make it easier for VPNs to function without being detected or even blocked. Not all VPNs will allow you to access all sites. There is some that you can still have problems accessing sites that you normally wouldn't be able to access, right? I'm gonna tell you, there are so many opportunities that I've tried to access that did require a VPN or an alternative way to access them because they were protecting like your data, and that's a big deal. And so the company doesn't want to have a breach, right? Because they're collecting funds, right? If your crypto is coming to them in large amounts, they want to make sure that the protection is on. So they require you to have a VPN to access that. And I'm gonna tell you, with Zeniq Technologies and the opportunity that I was mentioning, in Dubai, there are bonuses that are paid out that are $1 million or more, or €1 million. All right. And so would you want your data to be protected if you're handling or in a position to either receive €1 million bonus or in crypto, or either way, right? I think anybody would want that to be protected. And so that site is protected. And so in order for you to access that site so you can participate in those particular bonuses, you have to have that level of protection, and a VPN is what that level of protection requires, right? So that's how you access your site. Currently, VPNs are blocked by governments and ISPs because they may be used to bypass censorship and access banned websites. However, if data is spread across many different computers around the world, it will be much more difficult to block a VPN completely. And that's where the distributed ledger comes in, and the distributed nature, decentralization of your data in Web 3.0. So it won't be in one place, it'll be across many nodes across the globe. Another way that Web 3.0 could affect VPNs is by making them more secure and difficult to hack. This could make VPNs more secure than they already are, as there would be no centralized server for a hacker to target. So finally, the new web could also lead to the development of new and innovative applications under the VPN title. So to me, it's pretty exciting to see how Web 3.0 could really produce a better virtual private network than we already have, right? And I'm gonna tell you, the Tor browser is absolutely one of the best out there. So basically what they're saying here on this site, the decentralized nature of the new web will make it more difficult for ISPs to block the VPN. And secondly, the security of decentralized data storage will make VPNs more secure than they already are. So I think that is a massive, massive plus for global citizens to access sites when and where they desire. Your data is protected. Data privacy is your right, and you should have that. So if you're trying to access a site like, Safir Global or Zeniq Technologies, and somebody is challenging you and saying, "Oh my gosh, you have to use a VPN. It must be illegal. It must be immoral. It must be something that nobody should access," then it's easy to rebut. And my message to the ones that believe that that's a problem, then I would again say, when I'm involved in a crypto investment and it is on an international level, I'm a global citizen, therefore I'm able to access that, then the only way to access it through a VPN, which I access stuff in the US through a VPN. I've already showed you so many government agencies that require VPNs for remote workers. So on top of that, if I'm accessing the site, if they are delivering large sums and they don't want prying eyes in there, then if they require me to do KYC and they require me to use a VPN just to access the site, then I applaud them because they're making it more secure and my account is more secure. And on top of that, they have the 2FA and they have really 3FA or the 3FL. They have a whole other level of security, whereas I can't only access the funds that are due to me. I have to actually confirm my identity through a third party site, right, through an app, so that I can come back and access those funds. So if I'm going to get a bonus of €1,000,000, I want that site to be very, very safe and protected. And if I have to use a VPN to access it, and that's what they require, then I am willing to do that. And I will accept the fact that if you are willing to join in a particular operation that has that level of compensation through crypto or through fiat, then I would suggest that you applaud the company that requires a VPN access if you're from the US or from any of the countries that will allow you to access through a VPN, because it protects you, it protects me, it protects us, and definitely protects the company for that long-term passive residual crypto or fiat income. Your community, your family, your future is protected when a VPN is used. That's what I want to leave you with today. And I hope that you understand that we are in control of our future, and it should always be that way. All right. So peace. And until next time, have a good day.